What's going on, guys? This is Aaron from Departures Capital. We're here with Aidan Mills, Chief Executive Officer at Northstar Clean Technologies. How are you doing today, Aidan?
Great, Aaron. How are you?
Doing great. Excited to have you on. So Northstar Clean Technologies is a clean technology company that has developed a proprietary design process to convert discarded asphalt shingles into new materials. Can you tell us more about what the company does?
Sure. Listen, thanks for the intro. So yeah, we have a proprietary technology that literally takes an asphalt shingle tile and splits it down into its individual component parts. And as we bring them out the back end of the facility, those component parts are all sales quality specification. So let me tell you, maybe I should start first and tell you what a shingle is actually made up of. So shingle comes off the roof. It's made up of kind of three component parts. So about 50% of the shingle is sand, about 25% is fiber. The old shingles have got paper as the fiber, new shingles have got fiberglass, and 25% is asphalt oil. So our process, proprietary, and we believe we're the only people in North America or the world who has the technology to be able to split those up into the individual component parts.
That's very interesting. So why is asphalt shingle recycling so essential right now? And what is the market opportunity for Northstar?
Well, look, 5 years ago, I don't think anybody was really worried about what was going to landfill. And in 5 years' time, this is going to be such a big problem that people will absolutely have to sort it. But this is an ESG play and a circular economy play that is actually ready to deliver now. I'm not asking your investors to think about blue hydrogen in 2030. This is literally a technology we can apply today. And here's the size of the problem. So in the US, about 84% of all new roofs are asphalt shingle. So it's the most popular roofing material in North America. And so with roofing and re-roofing and demolition and construction, etc., the amount of shingle tiles that come off roofs every year is about 13 million tons. So let me put that into perspective about what that actually means. So if you Google recycled asphalt shingle or RAS, every single city has somebody who's doing that. And what they're doing is they're taking the tile, grinding it up, and then selling it to road manufacturers to put in roads. Probably about 2 to 3%, depends on the jurisdiction. Some people don't allow that to happen, and some will be up to 3%. But of the 13 million tons that comes off roofs, 1 million ton goes into RAS, and it leaves 12 million tons. So here's what 12 million tons of asphalt shingles mean. So 12 million tons of asphalt shingle is about 3 million tons of asphalt oil, from the composition I was talking about earlier. 3 million tons of asphalt oil is equivalent to more than 18 million barrels of oil.
Wow.
So that's the same as 1 day of US production. So if you think that the amount that is going into landfill every year is the same as 1 day of US production pouring straight into landfill, that's the size of the problem.
Wow, that's crazy. So Northstar has an offtake agreement in place with a multinational construction materials company. Can you tell us more about that?
Sure. So if you look at what we do, so we take the shingle in, and then out the back end comes the sand and the fiber and the oil. The process originally was designed about 10 years ago in Lafarge. So the big cement and asphalt company. So they decided to take it to a point whereby they were looking at capital deployment in that. They decided not to do the capital deployment. So the entrepreneurs that started the Empower company that then got purchased by Northstar took this idea and started to develop it. So we've got to the point now whereby we did some commissioning runs over the last few weeks, and we know that the technology works. So out the back end of the plant came oil and sand and fiber. So we know the process works. And as part of that, original agreement, the first 3 plants in Western Canada, the output from those will go to Lafarge. So we have an offtake agreement already in place with Lafarge that guarantees the offtake of those first 3 plants. Now, interestingly, the price for that offtake agreement is like a commissioning contract. So developed 10 years ago, it's like a commissioning contract, not a steady state contract. We believe that there's upside to that contract because we should have steady production, good QA and QC at the plant, and we should be producing anywhere from a truck to 2 trucks a day coming out of the Empire facility in Delta. Will likely be a little bit lower, but the new expansion plants, the first of which will be built in Calgary, should have an output, about 150 to 200 tons per day of asphalt in the front end, and like 25%, so 30 to 50 tons of oil coming out the back end.
Awesome. So Northstar has some exciting catalysts coming down the pipeline in the coming months, including commercial production at its Empower facility. Can you tell us more about that?
Sure. So as I mentioned earlier, we've done commissioning runs at the Empire facility, and so commissioning runs are really good because they basically give you, number one, you prove that the technology does what it says it does on the tin, and we know that that's what it does. And then you identify the steps that you need to take to steady state production. So steady state production for us is going to be in Q1. And so and my view of steady state production, look, it could be kind of like 50 to 100 tons a day. The Delta plant is where the entrepreneurs entrepreneured this new plant. It's not going to be the same as the expansion plants from a capacity perspective, but yeah, that's going to be like kind of really demonstrating that we have commercial production. The second thing that we're doing at this minute in time is we're looking at the CO2 footprint of our plants. We believe that our CO2 footprint to produce asphalt out of the Empire facilities and under Northstar is lower than the virgin production of asphalt. So we think that every hour our plants run, it will have the asphalt that comes out the back end will have a lower carbon footprint than the stuff that comes out of refineries today that goes into asphalt shingles or into paving. The other thing that's pretty exciting at this minute in time is our engineering contract. So we went out to 3 Calgary engineers. We ran an RFP process for Calgary engineers to do 2 things. Firstly, to do the detailed design of the new expansion plant, and secondly, to help us optimize the plants as we go forward. So when we build expansion plant 3, it should be better than expansion plant 2, and expansion plant 10 should be better than expansion plant 9. So the engineering companies will be incentivized, the engineering company will be incentivized to provide process optimization as we go forward. We will be ready to announce that in the next couple of weeks here about who we selected. And the feedback from the engineering companies, both on the capital side and on the timing side, was very good, well within our budget, and likely to be able to deliver at the end of Q1.
That's nice to hear. So the company also expects to commence construction at its expansion facility next year. Can you tell us a little bit more about that facility?
Sure. So when the engineering is finished at the end of Q1, we'll be at detailed engineering. So that's really drawings to be issued for procurement and construction. We expect the construction to start in Q3 of next year, so the second half. And the plan for that is for Calgary. We've already got the next 5 plants planned as well, and those will be in Toronto, Edmonton, Seattle, and Portland. So we have that already established. So the new expansion facility. So I said the Delta plant or the plant in Delta near Vancouver is probably going to be 50 to 100 tons a day. The new expansion facilities, we believe, will be between 150 and 200 tons a day. So the advantage from a green technology perspective is the scale up from essentially the demonstration plant up to the full manufacturing facility is only 2 or 3 times. It's not like we've got a bench scale facility in Delta and we're going to make it like times 50 to get to the new expansion facility. So the risk, therefore, is pretty low on the step up. And we think that can run really, really efficiently. New plants probably are kind of our view on the capital is about 10 million bucks per facility. So again, this isn't a green technology with a reactor in the middle of where we're going to have to spend 50 million to put it down on a site. 10 million, and the market for that is every city that has greater than 1 million people literally can have one of our plants. That will generate enough asphalt shingles to go into our plant and operate at the city level. The other thing that's important about these plants is they're all going to be exactly the same. So, for example, when we go to the Toronto market, which is, we could in theory put, 4 times the volume of processing. We're not going to put a plant that's 4 times the size. We're going to put 4 plants. So that's the real advantage of going to cities that are bigger, is you can just put multiple plants in those cities.
Definitely, yeah. So Northstar is moving quickly towards generating revenue. Can you talk a bit about the company's multiple revenue streams and near-term projections?
Sure. So the way that we have the revenue model set up is there's revenue in the input, there's revenue in the output, and then there's the kind of the CO2 benefit that sits on top. So revenue in the input is basically a tipping fee. So today, if you're in Vancouver, let's take the plant in Delta. So the real advantage that we're looking for is to site our facilities close to the landfills. What we really want is the roofing contractor or the aggregator or the waste collection guy to literally turn right to us instead of going left to the landfill. So the Delta facility is like 5 kilometers away from Metro Vancouver's landfill. So super easy to kind of turn right instead of going left to the landfill. And so if you take a ton of asphalt shingles today and you bring it to the Vancouver landfill, it'll cost you about $130 a ton to offload it. We'll be cheaper than that, so whatever, 10 to 15 bucks cheaper than that. So we give people an incentive to come to us rather than go to the landfill. The other advantage we have is we can be unloaded. We can unload a truck in 15 minutes. And we can likely, give the driver a coffee when he turns up to site, so he's incentivized to come to us and not go to landfill. So that gives us revenue in the front end. Then the revenue in the back end comes from the fiber sales, the aggregate sales, and the asphalt sales. Now, look, is anybody going to give me more money for sand because this is a green process? No. But the asphalt sales have got a significant upside. So like we talked about with respect to Lafarge earlier, look, the companies in North America have got a line that they either produce or buy or use asphalt for. And suddenly these plants produce a green line. So this is the only green asphalt in the whole of North America. And so if you think about people, starting to produce that, then that means that we believe we have a green premium for this asphalt that sits above the market price. And so we think there's upside from the tipping fee, of course, because the price for tipping is not going to go down. People are not going to make it cheaper to put hydrocarbons in landfill. And we think the asphalt price is going to go up too. And then sitting above all this is what I said earlier, whereby we think we have a carbon footprint that is lower than the virgin production. So for every hour we run, we produce asphalt that has a lower carbon intensity than the asphalt that is being used today. So those are the 5 revenue buckets that kind of sit with respect to the model. New plants, probably, as I say, in the kind of $10 million range. And for the expansion plans, we expect an annual EBITDA of between 2 to 5 million bucks, maybe even higher depending on what happens with the green asphalt premium, the CO2 pricing, and the tipping fee. It'll be different. Every plant will be different in each area, but we think we're pretty solid on 2 to 5 million bucks of EBITDA out the back end of the plants.
That's awesome. So the company IPO'd back in July. Can you give us an update on your balance sheet and how you're looking financially?
Sure. So the most important thing, so company IPO'd in July, 12.2 million that came in. At the end of the last quarter, we had $10 million on the balance sheet. 0.9 of that was debt, which is a kind of a local revolver, and the rest is equity. So the thing that's really important about that is if you think about this this plan going forward, we will need probably $60 million worth of capital in the middle of next year. But if you think about that, in our current structure and that $10 million worth of cash, there's no government funding. So there's absolutely no green infrastructure funding, municipal funding, provincial or state funding in that cash number. And there's no green term debt in there either. So as we step back and we look at the $60 million expenditure in the middle of next year, we believe that a proportion of that, maybe 25%, can come from government funding, and potentially up to 50% can come from debt. And what I mean by that is term debt that is supportive of a capital build and that is like kind of green anchored. I mean, if we have the supply agreements in the front end and the offtake agreements in the back end, that's good for traditional debt, but we actually generate CO2 benefits every hour that we run. So we think that the fit with green infrastructure funding and green debt is really, really strong. So we think and we have the resource and the capital to take the Delta facility, spend, and get it into steady state production, and to do the engineering study, and to fund the development through to the capital requirement in the middle of next year.
Wonderful. So the leadership team brings a collaborative experience of 280 years in operational and capital markets experience. Can you tell us how this experience contributes to the success of the company?
Well, look, I mean, somebody asked me this question over the last weekend, and I think the 280 years experience is one number, but that could always be really bad experience and not very helpful. So the numbers are relevant, but the way that the leadership team is set up is really, really strong. So we have the people supporting the project and part of the company who came up with the technology. So we have the entrepreneurs who know how this thing works. Two of the key stakeholders, own 5% of the company, and so are absolutely incented and are part of providing this awesome solution. We have support and on the leadership team, people who were involved in the funding as well. So the people who were involved in the IPO. So we have that capital markets experience. And look, I joined the company to help drive it forward. I've got 30 years worth of experience, 10 in kind of operations and engineering, 10 in commodity sales, just exactly like we're talking about, and 10 in kind of, strategically developing businesses growing forward. So as we build the leadership team, we literally have the three pillars that you need. Firstly, the guys who invented the technology. Secondly, the guys who know how to fund it. And thirdly, the team and the people and the leadership with all the diversity and inclusion that we need to drive the business forward.
Awesome. So what can investors expect from Northstar Clean Technologies over the next year?
Well, look, we should, in the coming weeks here, we'll be announcing the outcome from the engineering study. And who's selected as our engineer going forward, both for the detailed design and for the ongoing optimization. And that should be that's a really, really strong partner. So that's going to be good to announce that. Secondly, we'll have the results of the CO2 study. So that will tell us, and it's indicative, right? So the detailed engineering hasn't been done on the expansion plant yet. So look, it'll be early. Delta hasn't moved to steady state production, so it'll be indicative. But we believe we'll be able to say, look, indicatively as we run, here's the lower carbon footprint of our asphalt coming out the back end. So that will be defined. End of Q1, we'll have the design for the expansion plant. And we should be stepping pretty well towards permitting and site selection for at least the first 2 to 3 facilities. So that's going to be Calgary, Toronto, and likely Seattle. So as we think about that, and then second half next year, funding in place, capital in place to do the expansion program, we start the expansion program in Q3.
It'll be an exciting year for you guys. So finally, how can investors get in touch with you or find out more information about the company?
Okay, so for our investor relations, we've got a pretty simple simple helpline. So that's Ruth, our ticker symbol. So Ruth at kincommunications.com, and Kin are the company that support us from an investor relations perspective. Our head of IR and kind of director of capital markets, Carson Cision, is another good contact. So that's Carson at NorthstarCleanTech.com. And if anybody wants to get in contact with me, I'm the same. I'm Aidan at NorthstarCleanTech.com.
Great, Aidan. Well, it's been a pleasure. Thanks a lot for all the information, and I look forward to continuing to cover your company.
Yeah, I look forward to it. Thanks for the time today.
If you like these videos, kindly hit that subscribe button and the bell for notifications. Drop us a comment down below. We'd love to hear from you. And finally, always remember, Departures Capital is for information, education, and entertainment purposes only. Don't buy or sell stock because you heard it on here. Buy or sell stock because you've done your research, you've done your thorough due diligence, and you're making your own personal investment decisions for yourself. This video is not financial advice. Furthermore, this video may or may not have been sponsored by the companies that we've profiled within this video, and we may or may not own shares of any of the profiled companies in this video. If you want to know the full disclosure details, check the description down below, along with thoroughly reading our disclaimer. Thanks so much for watching, guys, and I look forward to seeing you in our next video.